Okay, so it's about 5 after, so I think I will start us off with a little intro, and I'll give people more time to show up before the real meat of this gets going. So, hello, everyone. My name is John Chittum. I'm the founder, co-organizer of Breaking in Kansas City. This meetup exists to help people get into the industry being technology, which is a very wide industry, huge industry, with lots of different jobs in lots of different places. So, as a part of that, we like to offer meetups that help with advice, career advice. We usually do resume reviews. We've done um, mock interviews, and we do lots of fun talks with people to offer their experience and expertise to this group. Folks who've been through uh, whatever you're going through, because we've all been through a lot. So this one is a fun one. This is tech money. This is financials. This is how to deal with a lot of things that might throw you for a loop, especially when you're first starting. So I'll regale everyone with a quick story. My background, like so many people in this meetup right now, is not technology. I did not go for CS degrees. My doctorate is in music composition. So I entered this field coming from academia and from working in music stores and working as a teacher. And I got that first tech job, didn't read my contract. I didn't negotiate at all. I was handed a contract that was 2.5 times more than I'd ever been paid in my life. To me, it was so much money, so many benefits that just looked amazing. It's like, I get health insurance. Never had that. Well, no, I hadn't had that since I was on my parents' health insurance, right? Um, and then that moment when I started working after a month or two, and I realized, oh, wait, I'm actually getting paid about 30 grand less than most people starting in the business in Boston right now, and I'll never make this money up working for this company. So a little light bulb went off in my head. It's like, oh, great, you you really can't make that money up in one position. Because that's not how it works. And maybe Michael will talk about that. Not sure everything I'm going to talk about. So this is important because just as much as it's important to learn about all the different jobs, crafting that resume, getting that first job, knowing what happens that moment you get that first offer is so important because that's something that we don't talk about enough as a society. We don't talk about money. We don't talk about what it's like to have to negotiate and know your worth and know what a 401k is, or even more in the tech industry, what an RSU is, what all these other benefits that you might not have heard of and what those will mean to your day-to-day life. So thank you everyone for coming. A little bit about the format. You can tell we're doing this webinar style, which is a little bit different than what most people might be used to with Zoom calls right now. We're used to doing the meeting style, but webinar style, that means Mike and I are mostly in control. We have a Q&A that I would have open on a separate screen. So at any time during this, you can put a question up there. And if it seems like a good time to stop, I can stop and get that question in there, unmute you and give you a chance to speak. Um, we'll also open it up a little bit, at various points we can open it up more and let people just kind of raise their hands and get people to speak. But know that the Q&A is always open. We can field questions there. Chat is always open. You can always on the side be, bringing up points, things that you've experienced. Feel free to use all of these tools and we will do our best to monitor things. So without any more fun stories, here's Mike.
All right, cool. Thanks, John. Okay, so yeah, so kind of mainly, yeah, what John was saying. You know, I'm gonna be talking. I'll talk a lot, but please feel free to stop and ask questions, and I'll try to. I want this to be as interactive as possible, and not just me, yammering on this whole time. So let me share my screen first. Got to.
And one quick note that I
Oh
even
yeah.
wrote down and didn't say, we are recording. So this will be made available for future viewing, so you can always refer back to it, but also know that we're recording. So don't say anything you don't want the future world to hear you say.
All right. All right, you guys seeing my screen now? I guess you have to chat. John, you seeing my screen? Okay, cool. All right. So let's get started. So the format that I'm going to do a little bit of talking within this PowerPoint, but actually I'm going to try something completely new, and actually just do a whiteboard session. And so it's either going to be great or it's going to go down like in a ball of flames. So well, I'm sure it's going to be the first one. So first, just kind of do a quick intro of me, of like just a little bit of my background, who I am, why I'm here, um, and then the meat of it will just be kind of I'll be doing a diagram of basically your financial landscape whenever you're an IT professional. And then, like I said, you can do Q&A. You can ask questions during it, but then we'll have a Q&A at the end as well. Okay, so first, me. So I am actually the complete opposite to where I'm a career changer, where I actually got a computer science degree. And I've been in software development for 19 years. Started off as a Java developer, as you can tell by the name of my firm. And yeah, so started in St. Louis, worked at Boeing for a while. And then I guess to the next point, I moved to Kansas City in 2006, and I've been working still. So started in development, kind of went up through the ranks and was managing as well. So I have a lot of experience whenever it comes to a lot of the interviewing process and kind of the resource management, the hiring and the firing, and and raises and bonuses, and I've been in the room whenever we have those conversations, so I can bring some insight from that perspective. And then yeah, so and then just kind of did some architecture work too. And I've been both an employee, a full-time employee, and I've done some contract work as well. So we're going to actually be talking a little bit about that as well. Um, and then yeah, so as far as where how I got to where I am now, so I started this firm in 2018, and I'm a so Java Wealth is an investment management and financial planning firm. So it does both, just kind of from the financial planning perspective, but then also the money investment side as well. So I became a certified financial planner. That's kind of the gold standard mark for if you're wanting someone to help you with your finances, then you want to look for a CFP. And so it's coursework, testing, experience, the whole 9 yards, and they're held to the fiduciary standard, if you've heard that term. So we're and then and yeah, like I was saying, so I do financial planning and investment management, and I do it all for a flat fee only. I won't regale all the details of that, but basically, I don't get a commission. I don't try to sell you anything. You know exactly how much my fee is. So that's basically, I'm just transparent to a fault, essentially. And then my focus, based on my background and for my passion, because the thing is with IT, I loved the career. I love the people that I worked with, right? And so I wanted to keep serving that community. And so I think it's awesome, the stuff that I think a lot of you guys are doing. I saw the shout out to Prime. And so kind of the group of you where you're trying to change careers into tech, right? And I mean, I think it's a fantastic career. There's tons of opportunity out there, and I think it's a great community to serve. Okay, and then real quick, I'm a member of a couple of networks. XY Planning Network is one where it's fee-only advisors that they are geared to serve the Gen X, Gen Y, so kind of the younger demographic. And NAPFA is also another fee-only network. Okay, so that's a quick background on me. and how I got here. And then so this is just this is kind of the outline that I'm going to use as I do the whiteboard stuff. But basically, as a quick summary of what we're going to be talking about, starting salary, benefits, what it's like IT contracting, and then some stuff from a career perspective as well. Okay, so without further ado, let's see. I'm going to stop my sharing. This, and like I said, this is the first time that I've tried doing this, so we're going to switch videos to my whiteboard video. Okay. All right, now I got to move over. Okay, so so yeah, whenever it comes to you know understanding your finances, then then yeah, I mean, basically, I'll just try to draw it out to where it's like, okay, first there's personal finance. So come on, work. That could be bad. It worked just fine 30 minutes ago. So there's you on the personal side, and then the place where you work, right? Oh man. Okay. So this is my building. Okay. And then so the main thing that people think about is your salary, right? And so kind of what John was saying, that's the salary is kind of the sexy part, right? That's the part that everybody knows. And so your employer pays you a salary, but as we all know, and yeah, as we all know, that salary doesn't come to you, right? So what comes out of the salary is taxes. So we have the IRS over here. And so just by default, without you having any say in it, then there's a certain amount that's paid out for Social Security and Medicare. And then there's the withholdings. So basically withholdings is just saying that the money that you are going to owe in taxes at the end of the year, your employer, you kind of tell your employer, hey, hold back so much so that I can pay my taxes, right? And so we're just going to have a little bit here. And then there's both federal and state taxes that get withheld. So before I go any further, can you guys see this okay? Yeah, we good? Cool. All right, good. Okay, so yeah, like I was saying, whenever it comes to salary, it's definitely very, and you'll see it plays a lot into not just how much money you're bringing home, but there's a lot of other things that are kind of built on this base of what your salary is, right? And I'll get to it later. It's like it's not your sole focus, but it's definitely a large part of whenever you're thinking of figuring out your job and whether it makes sense. Understanding like how your salary is treated is a big part of it, right? Okay, so next, whenever we get into some of the benefits, so one of the most important ones, one of the biggest ones, is your 401k, right? So I'm going to have your 401k up here. And so, some of you guys may, depending on what career you're coming from, may have already had a 401k before, but some may not. So just to be sure, so the 401k is so that is an account that is set aside for the retirement version of you. Yeah, so previously in previous generations, instead of 401ks, there would be pension plans. So it would be this person would work for GM for their entire career, and GM would have a pension, and then whenever they retire, they would get money from the pension. Well, so anymore now, pensions are, there's very few companies that have pensions, and so instead 401ks are the really popular option, right? And so the next part is how money gets into the 401k. Um, and so for that, um, the primary way that money gets in there is you as the employee, you say, hey, I want to set aside a percentage of my salary to go into my 401k, right? And so this is the first example of the, like, this percentage, like, it's based on a percentage of this base salary that's going into your 401k. And so, yeah, so that's something where you're the one that's making that decision of how much goes into here. And then actually, let me back up just a little bit as far as what that 401k is. So thinking of the 401k as being the account, right? But then inside of the 401k is you making the decisions of what that money is actually invested in. So it's not just, so because sometimes I'll hear like how much percentage does a 401k make, or what's the interest on it or something. But like the 401k is just the container, right? But then another decision that you have to make is actually how to invest inside of the 401k. So I don't know if you've ever seen like investment, like asset allocation kind of things, but it looks like a pie, right? Just like how much you want in stocks, how much you want in bonds, things like that. So within a 401k, the company determines what investments are available inside of there. So there's usually a list, and so it's not like you can go out there and buy single stocks or anything like that. There's kind of a list of these different funds that you can choose to invest in. And just for the sake of ease, the primary, like, one of the most popular things to do inside of here is choosing a target date fund. So a target date fund is just it's kind of an all-in-one investment here, where you don't have to pick all the different things, and you just pick the date that is closest to the date that you plan on retiring, right? And actually, I forgot to turn on a light. Oh, so much better. Okay. Um, okay. So before I go any further, I feel like I've kind of talked fast already. Are there any questions about how you put money into the 401k, and then what you kind of do inside of the 401k? I'll look over here to see. Okay, I'm going to take that as we're all good. Yeah, and actually, John, just kind of, you can scream out if you get any questions. So, okay, so that is the primary. That's kind of the first decision, or one of the first decisions whenever you first get a job. That's, they're gonna ask, how much do you want to withhold in taxes, and they're gonna say, how much do you want to put aside into your 401k, right? So those are a couple of the things. One of the more valuable benefits that your employer can provide is looking at how much they match on the 401k. So the idea of matching is basically, if your employer is going to say, hey, if you at least put 3% of your salary to the 401k, then we're going to match. We're also going to put 3% directly from us on your behalf, right? So they would be putting money into your 401k as well. So again, you see anywhere these percentages are, it's based on your salary, right? So there's a big difference of if you make 50,000 and you're putting in 3% and they're matching 3%, and then you making 100,000 and then 3 and 3 of that, right? So, and you can just see kind of how that compounds over time.
So we've got a question on 401ks, which actually kind of gets in this matching question too a little
Okay.
bit in a sideways way. So from Hi Sun, it's, if the employer offers Roth 401k and traditional 401k, and if I'm planning to get both, what would you recommend for distribution?
Yeah.
So if you're gonna, if I'm planning to contribute 5k total, how would you distribute between traditional and Roth?
Right.
There's
Uh-huh.
also a question, oh man, distribution ratio between bond and stock.
Okay.
Oh,
Well, yeah. I mean, we can do both. So actually, I'll take the second question first. Right. So as far as figuring out how much to put into stocks versus bonds, so it's there's a few different factors that go into that. So there's just the factor of how much time you have. So the younger you are, the more risk you have the time to take. So I guess, and actually let me back up a little bit. So high level stocks are the crazy roller coaster. Bonds are the kiddie roller coaster, right? Stocks, there's a higher possibility that you're going to make more money, but there's also it also can just dive, right? So there's a lot of ups and downs whenever it comes to stocks, right? And then bonds is, like I was saying, it's kind of the kiddie roller coaster. You know, there are some ups and downs, but they're not as much, right? So it takes into account how much time you have, and then also just kind of how much risk you're willing to take. So if you were all in stocks and you're on this crazy roller coaster, and then 2008 happens or March happens, then can you stomach that? And are you able to ignore it and not sell? Because we are very emotional people, and it's very easy to let that get to you, and people sell whenever they're scared, right? So there's that piece of it as far as determining how much time you have, how much risk you're willing to take, and then also how much risk you actually need to take. So whenever you're just getting started out, and especially if you're younger, oh, actually, I should have the caveat that this is all educational material, and do not consider any of this actual investment advice. I would get in crazy trouble if I gave out anything like that. So that being said, whenever you're younger, you have more time, you can generally skew more towards taking more risk. Whereas as you get older, then you kind of dial back the risk. And whenever I mentioned those target date funds, they do that automatically for you. That if you have a target date 2060 fund, right? That means I am planning on turning 65 in 2060, right? And so as you get closer to that date, then that fund will dial back the amount of stocks and dial up the amount of bonds that are in that one fund. And so, but from your perspective, you're just making one decision that says, just buy this one thing. So, I mean, target date funds are great. I mean, there are some downsides to it, but I won't get into all that right now. So, okay, so first, hopefully that answered that question, and as best as I could in 5 minutes. And then the other question actually segues perfectly to what I was going to just get ready to talk about, is the traditional versus Roth. So before answering the question, I'll try to give a quick description of what that even means. So whenever there's a traditional IRA or a traditional 401k, and that's the way that it was for the longest time. Offering Roth 401ks is a relatively new thing. So whenever on the traditional side, what happens is the money that you put into that 401k does not get included as part of your taxable income for the current year, right? So if I said I have, my salary's $50,000, I'm putting, just for round numbers, 10% into my 401k, then the rest of that money, that $5,000, doesn't get taxed this current year. Like the IRS says, you're saving for retirement, you're cool, so I'm not gonna ask you for that money, right? But whenever it's in here, it grows. You get to be over 65, you're starting to take money out. Whenever you take the money out, so the older version of you, so this is my crotchety old man with bad back. So the older version of you, whenever you take the money out of the 401k, then that's whenever the IRS says, okay, now we're gonna collect taxes on that money, right? So it's do I want to tax it? So in that's the scenario where they're saying I'm not going to touch it right now, but then whenever you get it out at retirement, then that's whenever taxes are going to be due. So that's the traditional side. Now, whenever you hear the Roth side, I'll leave my old man. So on the Roth side, then what you're saying is saying I'm going to go ahead and pay taxes now on the money, and then this percentage is going to be included as part of my salary this year, so it's going to get taxed. But as soon as it gets into the 401k, then from that point on, it never gets taxed again. So the old version of you, whenever you take the money out, the IRS says, cool, you already paid your taxes, back in 2020. And so the 2060 version of you can take that money out with no taxes due. So that is Roth versus traditional in a nutshell. And then as far as making the decision, there's some science and there's some art to the decision. So just from a straight math perspective, it is whether you expect the amount of money that you're making and getting taxed on today is, if you think that is less than how much money you're going to be able to take out in the future, then you would do Roth, because you'd rather pay taxes when your tax rate is lower than if you're expecting your taxes to be higher whenever you're old and taking the money out then, right? And then vice versa, whenever you're in your highest earning years, then a lot of times it makes more sense to get the tax break now, to do a traditional 401k, and so that you can get your tax break while you're in a high tax bracket and you're making the most amount of money. And then the later version of you would be in a lower tax bracket, and so it would be taxed less. So that's a very common and very difficult question. So hopefully that was able to land with some of you. All right. Okay. Are we good with that? I'll take that as a yes. All right. Yeah, that's the problem with doing this webinar style. I can't see anybody. I can't hear anybody or anything like that. So I'm kind of feeling like I'm talking at myself. So okay. Anyway, back to the rest of the benefits, right? So along with your core salary, a lot of times there'll be just a bonus, like a straight cash bonus, right? And so that your bonus will be dependent on a few different things. It could be dependent on how well the company does, how well you personally do. But then there's also a factor that just talks about, like, a lot of times a bonus is there's a number, and you multiply that by your salary. So it's like, maybe it's like one paycheck's worth or two paychecks worth, something along those lines. And so that's just kind of goes to show of salary being important, again, because it also adds on to your potential bonus. As far as taxes go, your bonus is considered income as well, so that'll get taxed. They'll withhold Medicare and Social Security. They'll withhold taxes for federal and state here, and also this will get paid into your 401k off of that bonus as well. So that's something to keep in mind. Okay, and then actually to the other primary way that your employer can give you compensation is through stock compensation. And so let's see how I'm going to do this. So we're going to say stock here. We're going to make it look like a piece of paper or a document. And so stock compensation can definitely get complicated. So I'm going to try to break it down. You can basically think of it in three primary ways. So the first one is, and John mentioned it, called an RSU. I'll try to write it inside of here. So an RSU stands for a restricted stock unit. And really the way that you can think about an RSU is very similar to just a cash bonus, but instead of paying you in cash, they're paying you in stock in the company that you work at. So from a tax perspective, it actually gets treated the same way, where they'll withhold money, or will actually hold back some of the stock, and then as soon as the actually I haven't talked about that yet, but actually I'll back up and say that. So with a lot of the stock compensation, and actually also with 401k matching, sometimes they have there's something called a vesting schedule. So what vesting is, it's incentives for you to stay employed at this employer. So if it's, just for a quick example, that there's a 4-year vesting schedule, and they'll give you 25% of it every year, so that for this RSU, they'll grant it to you, but then you're only able to consider it yours only after it vests. But whenever it does, then that means, hey, you've worked here for a year, so you get 25% of it, and then so that's whenever you actually receive this RSU, and then that's whenever it gets taxed and all that good stuff. Okay, the next one, which can be super complicated, are called incentivized stock options. And so I won't go into all the details of it, because I could do like 3 sessions on ISOs. But the idea of an incentive stock option is it gives you the option to buy stock in that company at a certain price, right? So if the company is, if it's trading at $10 a share, then they'll give you an ISO with a $10 price. And then if it goes to $20, then this ISO has value, and you can say, hey, I'm going to, it's called exercise that ISO, and then sell it, and then you get a profit. But if that ISO, if the company's stock actually the value of it is lower than the ISO, than the price that you have the option of buying it at, then it's worthless. So there's kind of this dance of thinking, hey, like, we'll give you these ISOs. I've seen some cases where that turns into a very lucrative thing, right? Where because the price on the ISO is low, and then the company went gangbusters, and then that's worth a whole ton of money. But then there's other cases where it's worth nothing at all. So there's definitely risk involved in kind of determining whether ISOs are worthwhile to you or not. Whereas with an RSU, with the actual restricted stock units, those always have value. As long as the company has a stock price that's greater than 0, then RSUs will always have value. So I'm going to pause real quick there, because that was a lot.
Feel free to yell in chat. I am watching as your quiet overlord. During this pause, I will say I threw in chat a fun little thing. The RSU has a nickname of golden handcuffs. And that's because, especially for larger employers, they will throw a large number RSU at you, like 50 grand. And with the thing being, okay, here's 50 grand in restricted stock units, but you only get 25% every year. So to get that 50 grand, you have to stay an extra 3 or 4 years.
Right.
So that's one way employers really try and incentivize you to stay. And those numbers just go up the longer you're at a company, because the cost of losing you as an employee with internal knowledge is high.
Right. Yep. That's a great point. And actually, really, you can say that about like the stock options are kind of the same way too. And you can get into some really weird scenarios too. Okay, so just keeping going on the stock, the last one is called an employee stock purchase plan. So this one's a little bit different because it's not something where the company gives it to you as a bonus or anything like that. The idea behind an ESPP is you have the option of saying, "Hey, I want to participate in the ESPP for this." They're usually in 6-month windows, and what you have the option of doing is you set money aside from your salary each paycheck, and then at the end of that 6-month period, then this ESPP it'll use that money to buy stock in your company, and it'll buy it at a discount. So a lot of times you'll see that you get a 15% discount off of the price of your company, right? And then on top of it, there's some that will look at what the price was at the beginning of that 6-month period and at the end of it, and take the lower of those two. So that can be extra beneficial. So that's just another possibility of like a valuable benefit that a company can provide for you. Okay, so now let's get into the other benefits, right? So the primary benefits are health insurance, and then they have dental, and then life, and long-term disability. Those are kind of the main ones that at least I'm going to talk about. So with that, first for all these benefits in general, so this is the stuff that most companies have a period at the end of the year called open enrollment period, where you elect your benefits for the following year, right? So a lot of times, it's in October timeframe. And so inside of there, you're making the decision on what kind of health insurance I want. Do I want dental? And then a lot of times life and disability, there's some they call it basic or base life and disability that they will provide for you. And then you can also buy extra. Okay, so real quick, just to kind of go to the percentages, the life and disability insurances, they usually do a percentage of your salary. Right, so a lot of times it's life insurance, they give you one-time salary, something like that. And then disability is a percentage of your monthly income. So, okay, that's just real quick on that. And then actually with health insurance, so that's obviously a very big one for a lot of people, as far as, does your employer provide good health insurance? And so that includes, what kind of coverage there is, but then, one of the main things is how much does it cost? Because these benefits, whenever you're enrolling, you're going to be taking money from your salary that is going to be sent to pay for these benefits, right? A lot of times it's pre-tax, so that's a good thing, but you're electing how much, what kind of benefits you want, and then that money is going to get paid it's going to be taken from each paycheck. Okay, so one thing I want to talk about with health insurance, there's a few different types of plans, and one of the, I guess, most popular ones whenever it comes to people who are younger and are generally healthy, to where they're only going for their regular checkups and things like that, is that you can elect what's called a high deductible health plan. And the reason why, and the big thing that comes with that is something called an HSA. Right? So I even have my red cross here, maybe. Oh. So that HSA is your health savings account, right? And so this is an account that the primary purpose is the government is trying to incentivize you to say, hey, put money aside into this account, because on a high deductible health plan, you have to pay for a good part of your medical bills, you pay for it, right? It's not a copay kind of thing. It's if you go to the emergency room, then they give you a bill for how much that emergency room visit was up until you hit your deductible. So the HSA is kind of this account that, the government has made very tax advantaged to try to encourage you to save money into it, right? Um, so yeah, it's because you'll get a tax break whenever you put money into it, and then also um, if you use it for medical expenses, it's not taxed whenever you're actually using it on the way out either, right? So, um, and then real quick, one kind of hidden thing about an HSA, which is why I bring it up, is an HSA is actually, you can kind of think of it as two separate buckets, two separate accounts. So one of them you think of just like a checking account, where whenever you put money into an HSA, then it goes just like a checking account. But then there's another side of it that's like an investment account, right? So if you're able to max out your HSA and then not have a lot of medical expenses, then you're actually able to start investing inside of this account. And then yeah, like I was saying, there's a lot of tax advantages of doing that. And then the worst case scenario is if you use all that money, or if you're not touching that money, and then the old version of you needs that money, then if it's for medical expenses, it's tax free. So it's like a Roth IRA in that perspective, but you also got a tax break on the way in. Or if you're using it for something that's not a medical expense, whenever you're older, then it's treated just like a regular 401k. So at worst, for the older version of you, an HSA is just like another retirement account. So that's kind of a little hidden hack for you guys. Okay. Again, a lot of stuff. Any questions right now?
It's a quiet room.
Yeah. Okay. Hey, that's fine. Just soaking it in, I hope. Okay. So whenever you're getting into IT, there's kind of two primary ways of doing the work. So what we just talked about is kind of if you're a full-time employee. And so whenever you're a full-time employee, they give you the salary, you have these other possible benefits, they match your 401k, you kind of have a better suite of your health insurance and all that kind of stuff. And so employers will kind of give you this, like, what your total compensation package is, and it'll be salary plus the value of all this other stuff. And I'll be honest, whenever I was first a dev and I'd see that, I was just like, oh, whatever, that's like, they're just trying to make themselves look better. But as I've gotten older and a little grayer here, then there's some real value in a good 401k match and some stock compensation and some good benefits here, right? So that's kind of your classic full-time employment. The other very popular option whenever it comes to being in IT, being a developer, there's also, for business analysts and PMs and a lot of those roles, is working through contracting companies, through a consulting company. And so that the version of that, here, I'll make the consulting company smaller. All right, they have a smaller building. Whew. Okay, and then so if you work for the contracting company, then they kind of have two different ways that they would be treating you. So the first one would be if they treat you like a W-2 employee. So you're technically an employee of this contracting company, right? And so they would still pay you a salary, although generally bonuses aren't a thing. I'll go ahead and clean this up a little bit. If you're contracting, you're not going to get stock compensation. You're not going to get a bonus, really. And then rather than it being salaried, you're going to be paid hourly, right? So you're going to get, X dollars per hour, right? Some do provide benefits. They're generally a little lighter on benefits. Don't tell any contracting companies I said that. But they do offer health benefits there. And some do offer 401ks, and then I believe there are some that will match, but it's not as common, right? So whenever you contract, then you might see this number and be like, oh well, if I contracted, I could make, it's like I could make 90,000, but if I was a full-time employee, I'd only make 70,000, right? And this is part of the reason why, because they're not doing some of these other things, right? Um, and then from the contracting company's perspective, the actual place where you show up to work is over here, and so they're dealing with just the contracting company, right? And so from their perspective, they're actually just paying this contracting company another hourly rate that is a lot of times a good bit higher than this rate. So we'll say it's Y per hour, right? And then the contracting company, since they're providing some of these services of landing you the job and some of these benefits, and they're withholding your taxes for you still, then they take a cut, and then the rest goes to you. That's kind of the first way. Whenever you're thinking of, like, if I'm contracting, then that's kind of what that looks like a little bit more. All right. Okay. Any questions on that?
We do have one double question back on benefits, which
Okay.
is kind of choosing the high deductible plus HSA
Yeah.
versus sort of your standard copay style.
Yeah.
Is there a certain type of person you'd recommend the high deductible HSA to?
Right.
I'm going to go with that more as the question, since we're learning. We don't want to be too specific.
Yeah. Yeah. Yep. Yeah. Generally, yeah. Like I was saying, with a doing a high deductible plan, if you're generally healthy and if you don't, I mean, obviously there's a gamble, because it's like, yeah, I may feel like I'm healthy, but I might break my arm, January 2nd of 2021, right? So there's definitely that. But if you don't expect to use your health insurance that much, then getting a high deductible plan can be good, because you're able to max it out and save a lot of money into your HSA. Or on the other side of the token, if you plan on just completely blowing through your deductible very quickly, then the high deductible plan can make sense. But it's kind of in that middle range where a lot of times doing kind of more the traditional PPO type plans, where you do your copays and everything like that makes more sense. So those are general guidelines. That's best I can do in this format.
Yeah, that's always a tough decision, because it is a big risk question. Because if you haven't had to deal with a high hospital bill before, I can tell you from experience that they're very high.
Right.
And they can bankrupt your family very quickly.
Right.
So that is a tough decision to make, like a personal thing, because you have to weigh all of your, not just your health, but kind of like your family health history, something to think about there too. So from my point of view, from my personal story on that, I had cancer as a child. And even though I have now run a marathon and I'm in fantastic health, I personally will not choose to do anything other than a PPO or an HMO, because I know my personal health history says I'm at great risk for other problems down the road, no matter how great I feel right now. I feel fantastic.
Right. Right.
So it is difficult. It's really about your personal history and personal knowledge there.
Yeah. Yeah. Yep. That's all good points. Okay. All right. I don't think I saw any other questions. Okay. So then finally, whenever it comes to contracting, the other option is that you actually, they call it, rather than being a W-2 employee of this contracting company, that you're a 1099, they call it a 1099 contractor. And so in that case, then there's definitely no 401k, and then there's no benefits, and they also don't withhold taxes for you, which is a wildly important piece of it. But they also don't take nearly the cut that they do for W-2 employees. So whether you actually go all in and create your own company, which I know some people have, then basically the employer is just working directly with you, or if the contracting company that you're working with, if they 1099 you, then they're not going to take nearly as much, and then this X gets to be a lot higher, right? And so that's another one where you think that, hey, if I was just a 1099 contractor, then I could be not making 100,000, I could be making 140,000 instead. And so just thinking of, it's like, that may be the case, but you do your own benefits, you shop for your own benefits, and then you pay taxes. You pay quarterly taxes. So you're rather than anybody withholding things for you to send to the IRS, and this is the Social Security Medicare part, right? Along with the withholdings, that you'd be on the hook for that. So if you do something like that, get a CPA or get a bookkeeper to help you with that. But that's, for people, if you're single and you don't have, you're kind of not tied down, then people, kind of going that contract route can make sense. You might be traveling more, things like that. And then also just kind of the dynamic of being a contractor versus a full-time employee. From this employer's perspective, if things start to go south, the contractors are the ones that get cut first, right? And then they'll protect their employees first, and part of the value for the client of contractors is that it's quick to onboard them. They don't have to be the ones to go shop around and interview a bunch of people, and then so it's just there. It allows them to be more flexible. So okay. So that's kind of 1099 versus W-2 whenever you're contracting in IT. And then finally, just really, and kind of ending on this, is for the career perspective of it. This is all a bunch of money stuff, but money's not the whole reason why you're doing this. Sure, having the money is going to allow you to travel. You have your family here, you have your kids and they have college and all that kind of stuff. So that's definitely, it's a very important part of it, but really it's for you and wherever you're working, whether you're a full-time employee or if you're contracting somewhere, it's just how much are you enjoying it? How happy are you, right? It sounds cheesy, but it's totally true. Don't let this drive all your decisions and then you not be happy, right? So there's definitely that part, and then just kind of understanding your value. So you have a skill set that's valuable to this company and to a bunch of other companies, right? And so understanding how much that's worth in the overall market gives you a lot of power whenever it comes to negotiating your current salary, shopping around at other places. So there are some companies where they'll treat you, if you do well, then they'll treat you well and give you pay bumps, right? That's not just your cost of living adjustments. But I hate to say it, but a lot of times moving from one company to another is where a lot of your pay jumps come, right? But again, that's not across the board. So I'm not saying, hey, switch jobs all the time. So, but actually, one side thing: whenever you are changing jobs, wherever you're thinking about going next, and you're talking to them, you don't have to say what you were making at your last job, and I would recommend that you not. So, just from a negotiation perspective. It's just saying like, hey, this is what I can do. This is what my value is that I can bring to your company. Let's, let's figure it out. Okay. So whole lot of chicken scratch. Let's see. I think that is all I had as far as whiteboarding stuff. And we are right at 8 o'clock, but I can stick around a little bit longer. So let me hop back to sharing my screen. Okay. All right. So this is everything that we just talked about. Yeah. Basically, this saying, how is this going to help me code? It's that if you figure out the financial part, then you're going to be happy. You're going to be better at your job. Kind of do this to be equipped for your income increases. And then yeah, just being able to understand this to avoid any big mistakes. And then just kind of illustrating the average salary for, and this is just for kind of just the role of software engineer within Kansas City. Median right around 74,000. And so that just kind of gets to kind of understanding what your value is, right? So just kind of leaving you guys with some resources. So from a career salary perspective, looking at Glassdoor can talk about different benefits. Looking at pay scale will tell you some benchmarks of how much different skill sets and different jobs are worth. I didn't talk about budgeting, spending or budgeting or anything, but two that I find very valuable one's called You Need a Budget, and then the other one, if you like spreadsheets, then look at Tiller, because it can actually hook into either Excel or Google Docs, or sorry, Google Sheets. And then my shameless plug is, if you want to stay in the loop with everything that I do, then I have my sign up here for my own video content. Yeah, I do a lot of these whiteboard videos and goofy things like that. But yeah, just trying to provide as much value as I can to the tech community here. Okay. Yeah, that's it. Any other questions? You can follow me on all the different social media stuff too.
Awesome. Well, people have thrown up some thank yous in chat like crazy. It's just very informative for me as well. Even though I've been around in this industry for 6 years now. Yeah, 6 years. Still have to think about it a bit. It's still very informative and good things to think about. I will toss one little addendum on kind of like pay scale stuff. I can only speak to my personal knowledge and experience, so this is not a giant world. I want to make that clear. I know that at my previous company, there were bands for every job title with lower bounds and upper bounds. And those bands were geographically based. So if you lived in Boston, there was one band for software engineer. And if you lived in Santa Clara, there's another band. If you lived in Bangalore, there's another band. And then they had a Midwest band, which luckily for me was Chicago and Dallas for figuring out pay, not Kansas City. But what would happen is if you were in that band at all, it was harder to go from like the low part of that band to the high part of that band. What they could do is if you changed positions or you were out of band, they could easily get you into the band. So it's like, okay, we know that, you're coming from an associate software engineer, you're going to software engineer. We can make sure you get into a good position within that band when you make that promotional move. Or if you move laterally in the company to another team, it was easier to be like, okay, you're below band. We can make sure you get in band now. But that move from like, okay, you're on the lower third of the band and you want to get to the higher third, that was a tougher thing to do at that company. So that's when people would kind of get that frustration was mainly the people who were seniors, senior twos, principals, people who kind of were at the end of the individual contributor route. So like, okay, I
Mhm.
really can't get any big raises anymore because I'm at the top of my band. So once you hit that top of the band, it's not that you never get a raise again, but they're like, well, here's your cost of living increase
Right.
because you're breaking the band for us already. Um, Here's 200,000 RSU or something crazy. Like that's what they would do to people. It's a huge RSU to keep you around because they know they can't give you that pay bump. So that's when you saw people changing jobs with the more senior people, which is then a big brain drain because they're losing the seniors because they can't pay them more. So it gets in a weird cycle there.
Yeah.
And
Yeah,
yeah,
I know some companies are trying to do better at having different career paths, having different technical career paths, so that you don't feel like you have to get into management essentially,
yeah,
to keep advancing. But yeah, I mean, it's a very good point. So yeah, if you get promoted, then sometimes it'll have a pay bump, but kind of just as importantly, you've just kind of leveled up into what salary band you're in, because yeah, your the HR is looking at that, as far as, are we competitive with the market, right? And so yeah, that's very much of an important piece of it.
and David just put in a great question, which is, do you think
Well,
the recent remote offerings
no.
will change those?
Um, I possibly. I think it could. I mean, so kind of famously, what's happened recently is that, so Facebook said, "Hey, we are going to allow people to be work from home permanently," right?
Mhm.
But with the caveat that if you move away from Silicon Valley and move to Iowa, then we are going to adjust your pay based on based on where you're moving to, like just based on the geography that you're going to, right? I mean, that's Facebook. I don't know about some of the other ones. The idea of doing that is, the fancy term is called geographic arbitrage, to say like, hey, I'm going to live somewhere cheap, and then I'm going to land a job remotely that's in the Bay Area, where the cost of living and the average salaries are way higher. So I mean, there definitely is some of that opportunity, but yeah, with so many people fleeing the Bay and all of that, I don't know if that would raise the expectations for the places they are moving to, right? Like for companies that are based in Des Moines or Kansas City, you know,
It's
I'm not
it's
sure.
it's such a tough question because when I was working at Akamai originally, which is the big company, they're headquartered in Boston, and I had moved to Kansas City, and they switched me to the Midwest band. Like I said, that was Chicago, Dallas based, is how they figured out those salaries. Um, the thing I kept telling them is, I can get you senior developers for what you're paying me right now, and they're going to get a good bump in pay because it's still more than the median.
Hmm.
And at the time, this is pre-pandemic, they were iffy on it. They didn't know if they wanted to hire more remote people. They didn't know if they want to get in that market. But that's something I could definitely see happening with companies as they get more used to this. What will happen, I think, for areas like Kansas City, I could see it getting pay bumps, not big ones, but I could see it rising a little bit. And that's going to be more of a demand thing more than anything, because the engineers are going to be able to say, well, I can go work for more companies than are in just Kansas City and stay here. And that's going to force the larger companies here to have to pay a little bit more to keep around the good engineers. Cerner is going to have to pay a little bit more because
Yeah.
they can start losing people to Facebook, who's only going to pay them 10 grand more. And to Facebook, they're still saving 100 grand from what they would pay them out in
Right.
Silicon Valley. Um, so then Cerner is going to have to go up a little bit. Garmin is going to have to go up a little bit. Um, so I don't think it's going to be like big changes. I don't think we're ever going to get Boston money unless you're crazy. and work at a start. Well, not crazy. Unless you work at a startup and you really aggressively push your salary, which I have friends here who've done that.
And actually, yeah, another thing that I didn't mention that I meant to is like from a career perspective is understanding where the market's going and kind of keeping your skills up to react to that, but also having to have an amount of clarity of what you should pay attention to and what is kind of a red herring where you're just going to waste your time, you know. And
Yeah.
that's as much art as it is science too, but just don't let it go stale, essentially.
Yeah. And we'll have more fun meetups on stuff like that soon.
Yeah.
So we're about 10 after, so we can probably start wrapping. First of all, I want to thank everyone who came to this. Please let us know if you liked this format or didn't like this format. If you want something more meeting-like, where we have videos up and everyone can be more interactive, or you like the more of a webinar, feel free to throw it in chat now. Feel free to message me on Meetup, or if you're one of the many people who have my email address, feel free to email me. Um, Also, we are already, so this is our first meetup in way too long. Chalk it up to COVID-19 plus myself and one of the other organizers switching jobs, and then another organizer having a kid. So, so the perfect storm. However, we're actually gearing up pretty well. I've lined up a couple speakers for hopefully sometime in the next month or so, end of September, early October. We're going to start a series kind of on so you want a job in ... And I'm going to try it. We're finding professionals in different areas of technology that you may not be as aware of, but are still definitely ways in. So the next one I'm working on is technical writing. I have a lot of friends who are technical writers. I was an honorary technical writer because I have a doctorate, so I've written many papers and I've been published. So I could write well. So the technical writers loved me because they didn't have to edit anything I gave them. I was also a teacher, so I knew how to write good documentation. So we're going to have a meetup with some technical writers talking about how to get into that field. And I'm working with some more folks from, I'm going to try and get someone specifically security oriented to talk about how to get into different security careers. That's a whole fun area. And the other one I'm trying to work on is DevOps, because it's a big word that gets thrown around a lot. And what does it mean to be a DevOps engineer? And if I can't find someone who's not me, I'll do it, because technically that's what I do now, I guess. Because that's what we all say is that, I guess, when you say you're a DevOps engineer. So any final questions, feel free to toss them in chat. Otherwise, we'll stick around for a little bit for those questions. And otherwise, good night, everyone. Thank you so much for coming out. It was great to have something after so long. And thank you, Mike. This was very insightful.
Yeah, I appreciate it. Thanks a lot, guys.
And this is where I wish I had hold music. I should have
Yeah, I know.
queued some up. It's not like I wasn't a composer. I could have just
I
had
always,
something.
I always think of the Monty Python and the Holy Grail intermission music.